Welcome back to Trend Trading the Major Markets. Let's take a look at what happened this week. Last week I started out talking about how great the closes were for the first week of January. This week the picture already changed a little bit. Just like you can expect it, once something is working very well, you know some correction is due and it will probably not look as good the next week. And you just gotta have that system that just tells you when something looks bad enough for you to get out. Let's start out with stuff that doesn't work anymore, going on to stuff that keeps on working really nicely this week. We are taking a look at the New Zealand US dollar here. We had our breakout at that point. We have a previous downtrend, a correction kind of moving up here, not really gaining too much momentum, as you can see, compared to this kind of momentum or this kind of momentum occurring there in the actual downtrend. Here you have a choppy market. Prices are coming back into the balance zone again and again and again without too much of a movement in between those pullbacks. Price hits the previous supply level and then starts to go down again into the previous trend direction. You have your breakout there, but now as a couple of weeks here, 2 months, just around 2 months have passed, we don't really see what we thought we saw last week. We did have this candle here last week closing in the lower third of its body, or of its entire price range for the week, which kind of tells you that the breakout level was rejected now from the downside, and you do have this possibility of price coming down further and reaching lower levels, maybe even as low as here. However, this week, as it turns out, was very bullish. We did have weakness in the US dollar, which leads to strength in the New Zealand dollar here in this forex pair, and we are closing the week just in the middle of the balance zone. And that, of course, is the place where price is showing us that it wants to correct, it wants to breathe, it doesn't want to go into that trend. And after our breakout, we already saw that. It was already running back into the balance zone, creating this fractal. It came down again, and now it does the same thing. And it kind of shows us that it doesn't want to go down too much, at least not for now, and we want to keep stops tight. We want to make sure our risk has been appropriate as we enter the position, and now we want to look at cutting losses here, since this market doesn't really seem to get going. Let's take a look at the Australian dollar, because there we have the same kind of scenario. You take a look at this market, you have your sell right there at that point here where it says sell fractal. That's where you went short, and now look at this. You have a market closing inside the balance zone. We have a fractal here, and that's actually just where our stop is. So price is closed on Friday right below that stop there, and we just gotta wait and see if the market is turning, if we're stopped out, or if this level will still be reached. The overall situation on the monthly chart in both of these FX pairs has not changed. However, we don't see too much of momentum going down, which means hard for a trend to establish itself, hard to trade, hard to add on, and probably a pretty crappy exit that you will get from a movement like this. Which means it's even more important, or it shows you how important it is to have appropriate size in your positions, because you never know which markets work and which markets do not work. Even though this was looking really great at the start of it, you see that we are not picking up this downwards tendency as expected. You never know which of your entries work and which won't, so your risk has to be alright. Otherwise you have no chance of survival in here. Kind of the same scenario as we just saw in the previous two pairs is going on in the euro dollar. You can see that after we approached the monthly resistance support level right down there at 105, we have not been able throughout the last 2 months to really go below that. We didn't even close below that in the last 4 weeks. Now we're coming up here towards the green moving average, which is the lower border of the balance zone, but we are kind of approaching that balance zone. overall we're still right there on top of that breakout of the monthly chart, and we kind of want to go week by week by week and see how decisively price is trying to move through that breakout here. But it would really now take a momentum move, quite the move filled with strength to the downside, that we'll see this market really penetrating that level and leaving it behind even. I mean, it's completely normal. You see this kind of correction here, but at some point it just needs to continue down. And we didn't see that yet. We have a position on from all the way up here. No add-on so far. We'll just wait and see if this will really move through. Current stop is just above the balance zone right there, and we'll see where this market is going to move. Let's now move on to a little bit more of happy scenarios, talking about the British pound Australian. Now this one was really messing with our short positions here during that time. 2 months where this market had been correcting, it went into the balance zone, it gives you this new fractal here, and then after creating that fractal you actually have 3 closes right there, which are so close, so near to the fractal high, that it's quite dangerous that you could get stopped out there. But it didn't happen in that market. This was the Christmas time right there, and we have seen quite the drop during the past week. Price actually lost more than 500 pips in just 1 week, and we are now approaching just what we want to see, the low levels of the previous low right there, where the market turned, gave you this internal correction, and now continuing the trend down. I doubt it will be too much of a stop once we reach that level right there. It will probably go a little bit lower. We will pick up a little bit of downside momentum as well. It's very likely we'll see a divergence forming between that momentum low and the new one that will be created. We'll just have to see what kind of move will follow, but this is very decisive. This is what we want to see, as we have been holding our shorts from these breakouts here since June last year. That's June last year, more than half a year we have been holding these shorts, and now stop is right above that fractal. Let's wait for the market to continue. Nothing else to do here. Just like throughout this half a year, we don't do anything. We'll just watch whatever runs. We'll let it run further, and we'll take out all the stuff that doesn't work. That means the US dollar related pairs here will be taken out. New Zealand dollar, Australian dollar, Euro dollar. We're really watching those to cut the loss, and we want to keep on holding whatever works. And now we're coming into the indice zone. We are looking at the Nikkei right there. We did see quite the loss this week. We were losing all of the gains from last week, and now we have seen this bounce into Friday's close for global markets, and we are closing just about 50% down, and we are still up. You know, for me this remains up. This is up. This might be a new bull market. We'll see how price behaves when it comes to this monthly resistance. When you take a look at the S&P 500, you see the same scenario. You had a drop off, and then you're even closing this week at a new high compared to the previous month. So that's very bullish again. No clue why people keep on selling and are calling the top as Dow approaching 20,000. Let's just ride that thing, you know. That's where the big money is. You took your entry right there above that fractal, and now it's just running. It has been running for the last 2.5 months. Let's take a look at the FTSE index, which is quite interesting because this is the strongest market throughout the indice space. Look at where this week is closing. Look at where the previous week was closing. This is the all-time high area that is marked here. We are marching through that, and we are not looking back as of now. You have your last 1.5 months that shows you massive bullishness in this market, and hopefully you took your breakout long right there, and your stop would be somewhere around here inside the balance zone, and now you're just letting it run. If this is going to be a new bull market, there will be quite some steam left here. You will see new momentum highs, and there's no reason to doubt this uptrend here that is seems to be unfolding. Of course, as soon as you see levels or kind of price action hitting levels lower again, then we'll have to revise that kind of scenario. But as we are trading in the now and we're not guessing what could happen, price is telling us to be long, and we'll stay long just because of that. For the last market this week, we'll take a look at the DAX, where we just see exactly the same scenario. You have your breakout, and just continuous upwards movement is followed by that breakout. You did have your first one here where the market failed. This is in April as it's been created. It's hit in August in 2016. Now we have the successful breakout to the upside, and to be quite honest with you, looking at this from the trend following perspective, for me this is just, there's only one target that this market is going to reach, and that's at least up here. Of course, you got to wait for this for many weeks now, probably, but there's no reason to go against this. There's no reason to pick the top. We want to take the breakout and then follow this market along, and it seems to be working out in the indices as well as the British pound Australian very well too. Please remember, when you are interested in this kind of trend trading, trend following approach, that it's actually quite possible that you will only have a small percentage of your trades making you money. I'm not even talking about the relationship between maybe 35%, 40% winners and the rest are losers in your trend following strategy. What I'm actually talking about is that of your 35 or 40% winning trades, you might only have like 5% or maybe 8% trades that really make the difference every 1 or every 2 years, depending on your time frame, in your performance stats. So you will only have like 1, 2, 3, 4, maybe 4 or 5 trades every 2 years that will really make you the big money, and all the rest of the trades, you just get rid of them as soon as you notice that they don't work. You want to enter everything with very small position sizes, and then you let it go and you observe which of the markets is picking up the trend. When you notice you have hooked up into a trend, then you want to increase your position sizes, just like we did in the British pound Australian. If you just take a really quick look at this again, this is the first entry here after the correction into the balance zone. You enter this with minimal risk. As you see it continuing down, you want to add on to your initial entry. I mean, you really have to take a look at what kind of risk you want to take. I always like to increase my risk a little bit as soon as I see that the trend is really moving my way. But it's a very fine line, because you do not want a trend to unfold having 3 or 4 positions, half of them lose, and then they wipe out all the profits of your initial entry, or maybe your second entry, your first add-on. And that's really a fine line. You've got to do some work there and have a look at what kind of risk you want to take. But these kind of trends will only happen like 4 or 5 times in 2 years, I think, at least. Gotta gain some more experience in that regard, actually. Looking at individual stocks might help. You can just increase the number of markets you're looking at, and then you have a better chance maybe to catch more of these major moves. But as the US dollar seems to be giving us that divergence we had been talking about, right there, we see weakness in here. We saw weakness again this week. We have this divergence coming up. Maybe it will start to go down or not up as much anymore, which would change direction in many of the FX pairs. And when you have hooked into what is based on this strength in the US dollar, then you've got to notice when the trend doesn't get going to get out, and you have only one position with very small risk because it was your initial entry, and you lose just a couple of bucks. It's not a lot that you will lose compared to your account size. And then you can keep your losses small, even if you have many of them. If you lose 60-70% of the time, it won't matter, since you have only very small losses. And then when you are in something like the British pound Australian, when you're hooked into the indice trends, and then you will make the difference in your account, in your performance, because this is running. Who knows how long it's going to take, and who knows if this target area I have been mentioning really is the target area, or if the market is going to go lower, or maybe it will turn here, give us a fractal, and we will lose a lot of these profits. Now, we don't know, but we want to stay in this trend. We want to keep on going with this, because this is what we are basing everything on. That there are outlier events, and that there are the chances for massive moves, and if you just stay in them, then you'll take all the profits from them, and everything that doesn't work you get rid of, and then you have a very smooth equity curve, because your losses are going to be small and you're going to hit it when you have a trend. Alright, that's just for a little bit of a general trading view of how I and this whole fractal trading, trend trading approach looks at the market. If you have any questions, please post a comment, like my video, and that really helps. And thank you very much for watching again this week. See you.